we'll talk about how the markets are positioned not only today, but also about the entire day. Also, we have Anshu Kapoor joining us to talk how positions are being taken for the full year on a portfolio basis, not only on a tactical side. Anshu, afternoon. Thank you so much for your time. Anshu, you guys deal with some of the top HNIs across the country, family office kind variety. First, I'd like to understand from you what's your current positioning of Edge, which is your long short fund. How are you positioned over there, long versus short?
Right. Good afternoon, Ajay. Great to be with you. And thank you for having me. Yeah, great question. Actually, long short has been a great solution in times of volatility, Ajay. And what we have noticed is that the drawdowns are very sharp. It could be stocks or sectors or market as a whole. In a week, you can end up losing anywhere between 5 to 15, 20%. And therefore, long short strategies tended to work well in this market setup. Well, as far as our product or our portfolio is concerned, we are about 70% long right now, Ajay. And the balance we are carrying mostly hedges or some shorts selectively. India is a growth market, and therefore stock-specific shorts don't work as well. But hedges make a lot of sense the moment we see things turning around. That is when it starts making sense. But the more important point, Ajay, is that a long short fund by nature is not benchmark hugging. Therefore, we do not have a compulsion to have, let's say, 15% in IT or 35% in financials. We can be very agile. For example, let's say real estate doesn't have too much weight in the Nifty. We can add that into our portfolio. So not only long versus short or hedge, but also how we play the sectors is fairly agile in our case, and therefore the outcomes.
That's amazing. In fact, probably that is the reason why your portfolio has done pretty well compared to the different asset classes or even the benchmark, just for comparison's sake. If you could share how the year went for you, 2022.
Yeah, so I can talk about obviously this product called Edge, the long short portfolio. And maybe if it's okay, I'll talk about other strategies as well. Well, Edge has done very well for us. If Nifty gave about 11 odd percent return, Edge portfolio has given about close to 18%. But overall, when you compare with the large cap mutual fund universe, there is a significant outperformance of about 10% odd for the year. And largely because of the reason that I just listed. For example, we had a view on real estate, we had a view on, let's say, metals, we had a view on IT, and those views, maybe they played out well. We went, let's say we exited IT much earlier, even before, this negativity started to build down. We entered into the pent up consumption trades maybe much earlier. So given the agility of the portfolio, we've been able to perform, and we've been able to carry, what you call net exposure. So we are very agile in cutting back on the net exposure, as in we will build hedges very, very quickly when we see market trending negatively or downwards. So I think those are the things that help us. That is one portfolio, Ajay. And if it's okay, maybe I can talk to you about private equity and other pieces as well.
Yes, I would be very keen to know about private equity, because also not only what you're telling your clients, but what clients are asking you, because we see a lot of big HNI family office opt for private equity or pre-IPO kind of deals as well, looking for alternatives when the market itself was very challenging.
Yeah, thank you for asking that, Ajay. It's a great question. And maybe I'll step back a little bit to try and answer this question. See, in India, obviously, as we all know, investing in equities through direct stocks or through mutual funds is now fairly democratized. And there's a big allocation anyways that is going out there. But also the fact is that now, Ajay, Indians are saving $700 billion a year. And that's a very meaningful amount. And now clients are asking us, how do we diversify our portfolios? Because everything cannot be just simple fixed income and equity allocation. So is there a sense of diversification you can give us? And within that, clients are demanding, okay, can you give us yield? Can you give us growth? Can you give us even country diversification and so on. So that is the customer's need. And to fill that need, if you will see, data from our AIF category 2, category 3, AIFs now are 7 trillion, 7 lakh crore asset class in India out of nowhere. In the last 3 years, this asset class has taken off. And largely private equity, venture debt funds, real estate funds, REITs, clients are now even investing in infrastructure funds. So there's a wide gamut of products out there. The demand is very strong. I think supply has to catch up, and that's what we're trying to do, is to build our investing capability so we can meet this demand of customers. That is point number one. The other interesting aspect, Ajay, is that about 20% of our AUM incrementally is coming from cities beyond the top 7 usual cities that we talk of. So these are customers from Indore, Ahmedabad, Nagpur, Kochi, Dehradun, and so on, who are saying, is there anything else beyond equities and simple fixed income that I can invest in? And that's a very interesting trend. So it's fairly getting acceptance all across the country.
Wow, that's an amazing input. $700 billion per year is a saver the Indian saver is generating. And also that input of 70% of your incremental AUM is coming from beyond 7 cities.
20%.
The top 7. That's very useful insight. Before I move on, I'm keen to understand what's your research team, and when you guys put your brain together, what's the hypothesis building for equity, because that's the most favorite asset class of our viewers, for 2023. Do you think it will be a moderate return year, challenging year for mid cap, small cap? What is your thought process?
Right. Good question, Ajay. And here, I think our first view is not to look at the index for direction too much, because if you would look at Nifty, a large part of the Nifty 50's earnings are global in nature. And therefore, my request to all our investors is to look beyond, a lot more broader in that sense for direction, or to create a benchmark for returns. Having said that, I think this is a year where you'll have to pick and choose sectors that you think are likely to do well. And, historically, we always talked about, the big consumption theme in India. But I think the narrative is fairly quickly moving towards what you call investments or capital expenditure. What we are noticing is a huge amount of capex happening in steel, cement, chemicals, logistics, pharma, data centers. Government is spending in railways, power, defense, and so on. And therefore, companies that were not so much in favor around these sectors could do well. So that is our input number one. And this is a very strong trend, as strong as what we saw in 2003 to 2008. Therefore, what I'm trying to suggest is look at sectors where green shoots are available, try and rationalize portfolios where there is slowdown showing up. And our view is that, this whole pent-up consumption will also eventually slow down. The consumption theme that carried us, or the export theme that carried us, there would be shifting of sectors or themes. And therefore, try and catch these themes if you want to do well. Per se, I think India will slow down with the global slowdown. We will undoubtedly be impacted, but I think relatively we will do better. And therefore, we'll continue to have some kind of a preference, not only from domestic investors, but also global investors. So it is a difficult year to navigate, but there are enough opportunities out there, is what I would say.
Wow, that's interesting. What are your thoughts on the small cap and the mid cap end of the market? Because I do know that HNI family offices also have a very large risk-taking capability and appetite for phases when the earnings are not coming, but outsized positions can be taken for a J-curve kind of earnings, 3, 4, 5 year view, kind of a private equity kind of a view, even in small cap, mid cap. So what kind of conversations are happening around that, and your thoughts on these pockets?
I think, I think overall on a portfolio allocation basis, the allocation is quite low to mid caps or small caps. 2021 is when we saw everything giving good returns. and then things got normalized last year. So far, I think the build-up in the portfolios is not there as much directly, but maybe through mutual funds and other vehicles. Customers are a lot more comfortable going through a professional fund manager than trying to discover the story themselves. And the stories will be similar or linked to some of the themes that I just mentioned. And in the event, I think the challenge with small caps and mid caps will be in the event if interest rates stay elevated for a longer time. That is where the margins and the working capital cost, all of that starts to hurt them a lot more than some of the larger players. So it could turn out challenging in our opinion, and therefore my advice to customers is not to try and fish or buy the correction and so on, but go through qualified fund managers or products out there. So that will be my advice.
Sure, fair point, and understandably so, because risks are also very high. So might as well take a informed advice or a basket approach there. Anshu, great talking. Thanks very much for your time. We'll have you soon on our sister channel 18 of Swadesh as well, because that data point which you said about bulk of a large part of your AUM coming from non-metros goes very well for Swadesh. We'll take this discussion forward there as well. Let's take it forward, and before we take